Welcome back. Joining me to take us through the day's trade is Makwe Masilela from Makwe Fund Managers. Makwe, thanks so much for joining us this evening. Now, we are seeing a mixed picture across the board when it comes to markets as traders, take a wait-and-see approach ahead of that all-important data out of the US. This, of course, comes after markets, did so badly, that global market sell-off that we saw last week. Now that we are seeing a sort of cool-off taking place within markets, would you say that traders, markets over-exaggerated that global sell-off we saw last week?
To some extent, it was more of a panic as well. Remember, something like this have not been happening in the longest time. I'm saying to get the Bank of Japan being that very hawkish and also to start people thinking of a possible recession. But you look into the local pulse, it was up nicely 1.4% for the whole week. And now remember, bears or expectations, of rate cuts are mounting very fast, and bonds tend to do well in that kind of environment. And I think that age-old relationship between bonds and equities is or is trying to come back. Remember, we had a situation where fixed income will offset losses, when it comes to equities. And we know that in the recent past, that relationship has been put in doubt. And now, as we said in our intro, all that data that will be coming out, it's a question of, it's no longer the central bank will be cutting, it's the question of the rapidness. Because I think everyone has started pricing in that the US will have just to start cutting, as we've seen the likes of the ECB, the Bank of Canada, major central banks have started doing that. And hopefully if they do that, it might also help us locally come November, that we might get our early Christmas gift, from our own Reserve Bank. And markets continue to be cautious. And normally, if you had that kind of a volatility last week, I don't think you'll go back into the market with much conviction.
Yes.
You'll want to go in and buy some tips where you can.
All right, let's get into some company news. Lots of company news on the local front. We'll start off with some M&A activity. Goldfields is acquiring Canadian mining company or Cisco. The deal valued at just close to 29 billion. A good move from Goldfields considering the operational troubles it's been going through. I think last week they were out with a trading update, warning of a production hit, warning of lower profits. So is it the time to, be making such an acquisition?
I don't think it's the right timing personally. If you buy when commodity prices are that high, unless if they know something that we don't know, that this gold price still has some legs to go, then definitely it will be a wise move. But the good thing with them is that they didn't just go and buy an asset that they don't know.
Yes.
They have been part of that asset, so they will definitely be knowing whatever difficulties are there in that asset. What will work for them is the gold price continuing to go up or remains at these elevated levels.
Markets don't seem to be pretty happy about it. I don't know if it was just caught up with, the red we are seeing in general markets. It is actually right at the bottom on the JSE Top 40 index, losing 6% today. Let's move over to Avenge. They expect to return to profitability, citing overall improved operating conditions. Is this a counter you follow, Makwe?
Not really, but we must give it to them that the guys managed to turn the corner. And it shows you that during difficult times, you need good leadership, selling some assets, restructuring yourself, and then end up being more of a leaner machine going forward. And as it is now, those shareholders who've managed to stay the course with them, they should be smiling all the way to the bank that at last it's paying off.
You're right. Those turnaround efforts really, starting to pay off. We have consumer-facing companies in the meantime really taking strain. Makwe Italtile, one of them, warning of an earnings decline of as much as 10%. This expected, right, considering, the high cost of living pressures as well as those high interest rates.
And also cheap imports, serious competition coming out there. And these guys are coming from a very high pace. People have been spending money to improve their work or work from home environments. And you can only put tiles, up until a certain point, You cannot forever be doing that every year. But yes, consumers are under strain. And also when you look into our infrastructure as well, it's not doing that great. People are not like building houses or renovating, stuff like that. But going forward, when things stabilize, I think it's one of those counters business that should be able to do well, especially the fact that they continue to improve their operating efficiencies.
And Italtel has, they had that period post-COVID where everyone, you're right, where everyone was just renovating and building. And once that dipped, one reason was, hey, you know what, things are tough, people are not building anymore. So it'll be interesting to see how that kind of plays out as the economic environment becomes better and, hopefully monetary policy starts easing. We also had Supergroup out with an update, troubles at the ports knocking the group's profits. What did you make of that update?
I think it was kind of expected, given all these issues other than our ports, the issues with Russia, Ukraine, Middle East, Europe struggling as well. And yes, all these logistic issues locally are exacerbating the situation. But if there's no serious economic growth, what is it that the guys will move around?
Let's get to your stock pick. You're choosing Cecil, Makwe, the group out with an update as well today. Not a really good update. So tell us why you're picking this one this evening.
I think all the bad things, are behind their back. We know it's all because of low chemical prices. We expect that to improve going forward because when the economies continue to cut interest rates, that should help economies to grow. We know that had that impairment, and the biggest one was coming from that U.S. chemicals thing. It's a once-off. We don't expect that to continue to happen. But now, if you look into their core headline earnings per share, they only dropped by 27%. The guys managed to improve their refining margins. The guys also managed to increase their sales. And if they continue doing that in this kind of environment, imagine if the economic condition gets to improve, definitely they should be able to start doing something.
So Cecil, when you're hanging your hat on today, Makwe, thank you so much for taking us through the day's markets action. That was Makwe Masilela from Makwe Fund Managers.